just give me your take on where the market stands and what you think about, her comments, obviously, and analysis of the data.
Yeah, David. Hey, thanks for having me on this morning. And before I get to that, I want to give a big shout out to the Pointe team. We had a great third quarter, EPS up 24%, and looking to have a great, strong finish to 22. So that kind of is really the tail and the setup for 2 different years, 22 and 23. As Diana reported on the resale market, we reported demand very sluggish. The interesting thing, and the consumers on the sidelines. On one hand, they see and hear the headlines about rates going up. On the other hand, where are prices going to go? And we reported orders down 50% year over year. Generally, the whole industry is selling at half of what it should be selling. So, David, I would say housing is the canary in the coal mine.
Canary in the coal mine for what?
Well, the Fed, if the Fed is listening, I know they know this, but housing, which has its multiplier effects, is the tip of the spear of the economy. And these rapid rate increases that has caused, I think you asked me at a previous show, is housing in a recession? Housing is in a significant dislocation, which is going to lead the economy to a pretty strong recession. And housing always has been that canary in the coal mine. I mean, you saw the data, I think it was a week ago, the GDP data showed residential fixed investment down 1.4%. So this is all leading up to a very tough 2023 as you look at housing. But I will point out, David, it's not that bad if you really take a step back and if the Fed would settle down and these rapid rate increases would settle down and there'd be some stability in the mortgage market, there is tremendous pent-up demand, and then prices will reach payments at whatever mortgage it is, whether it's 7%, 7.5%.
All right, that was my follow-on question then. So if we do sort of get to a place and just have normalized rates, the rates at least you and I may have grown up with, you think you can have a pretty strong housing market? For sure. I mean, because we're seeing the needs-based buyer, the reload buyers, it's really the needs-based buyers. But I can't tell you the amount of significant pent-up demand. I mean, you look at this industry, we just barely tapped into the millennials and frankly, the active adult. A company like us, we're well positioned with our land that we bought pre-22. We have strong margins to withstand prices, but it's just math. All you have to do is know that the mortgage rates are at 7 or 7.5, and then we'll adjust pricing to the payment, and the consumer will re-engage. I can tell you right now that the consumer is more psychologically challenged than payment challenged. The income levels for the millennials, which represents 57% of our buyers, is very strong. And then Diana talked about the resale market. Well, the resale market, everybody's going to sit still because they're on mortgages less than 3.5%. So they're going to have to come to the new home builders, and we're going to have the product available to them.
So just to dig into that a little bit more, Doug, when you talk about adjusting pricing to the payment, how much can you adjust pricing, and how are you balancing that against the actual cost to build a home? Are those costs starting to come down?
Great question, Morgan. I think the industry over the next 12 months, if mortgage rates are going to be in that 7% range, you're going to see goalposts. These are goalposts. Probably net pricing go through a change of 10 to 20%. But again, that's not that bad because the industry and a company like us are going into the business with very healthy margins. And then you asked about the costs. The supply chain in the front end is already feeling housing starts pulling back. I mean, most of the pundits are predicting housing starts to be down 20 to 30%. Well, that means costs are going to come down. And as costs come down, we can continue to adjust price to payment. And it's just getting rid of that psychological barrier that the consumer's having right now.
Doug, always appreciate the update. Thanks for joining us.
Thanks, David.